So the key message this week surrounds the triggering of Article 50, but I'm also going to take a quick review of last week and an update on our view on Europe. So it's been an eventful week in the UK in particular in terms of politics, but in terms of markets, it's been pretty uneventful this week across the board. That's fixed income, equity, commodities, and currency markets have broadly traded sideways. We still see strong data in general. In the US, for example, we've seen some revisions upwards to Q4 GDP, that's gross domestic product. We've seen some very strong consumer confidence coming in at 16-year highs, and we've had the 78th consecutive growth in jobs employment in the US. So here in the UK, Theresa May has triggered Article 50. We need to be mindful that I think this is the very early stage of a very long and complex process. Clarity around the outcome of that process, I think, is very unclear. The journey, how we get there, both in the 2-year period and beyond. And we need to be aware that our view is that the economic long-term impact of Brexit is unlikely to be materially negative, both here in the UK and in continental Europe. So whilst the UK has begun its divorce from Europe, the outlook in Europe, we think, still remains very positive. Despite the elections that we've got coming up in France and Germany later in the year, there's still very good data coming through. That's been evidenced this week, for example, with some very strong consumer confidence numbers coming out of France and some very strong business climate indicators coming out of Germany in the form of the IFO and the PMI numbers. Europe in the last month has started to perform extremely well. The Eurostoxx 50 broad index is up to the tune of about 5%, which leaves it in line year to date with the US markets, and our view going forward remains very positive and overweight in Europe.